Hey guys, welcome back to my YouTube channel. So in today's video I will show you that how to take trade in indices, right? And what is the timing for the trade to take in indices. So without wasting time, let's get started. Welcome back to my YouTube channel. So this what I was thinking, because everybody knows that the timing to take trade on indices, as I told you guys that you can take trades after 9:30, but I have not told you the specific time, right? So I thought like that's the good thing, that will be the good thing for you and your trading. So these are the two times when you have to do something. So after 9:30, it's not like this that after 9:30 you will straight jump on a trade at 9:45 or something. You will have to wait and watch the market till 10 o'clock, and 10 o'clock you can see in your charts most of the time the whole move starts, okay, at the 10 o'clock. And in afternoon session at 14, okay, at 14 it starts the whole move. So I have to show you that previous day's trade which I took. So as you guys can see right over here, right? So what's this? Over here there was a fair value gap, so I marked this fair value gap. And correct, if you go back on 1 minute time frame, you guys can see right over here, right? This is 9:30. So at 9:30 price gave a false move to attract the retail traders, and after that it left this relative equal highs. So it went up, filled the fair value gap, and then it took this both highs, and then it gave a market structure shift to the downside. So most of you, like those who are older on my YouTube channel, they know that what is a breaker pattern. So over here it was a breaker pattern. Should mark all of that. This was a breaker pattern, and price just came back in. There was a fair value gap also right over here. Came back in once, and then one more time it came back in twice, and then it shorts to the downside, okay? And the first thing is, when this whole move starts, look closely, correct at 10 o'clock, right? After 10 o'clock, see the move, and then it keeps on going till 12 o'clock, and then 12 o'clock stop, and then wait for 14, right? Now look at over here, in afternoon session, look at the time below, okay, right over here, look at the time. This is a 14, okay, like 2 o'clock in the New York time. So this one, price fell down till what? This fair value gap, okay? And this is a nice example and like clear setup, bread and butter setup that you can trade. There was a market structure shift, and then price fell and closed the whole damn fair value gap, and then it went up. So your trades, okay, don't take trades at 9:30, like from here, as you guys can see, from 9:30, and some of them will take trades somewhere around over here through by doing the optimal trade entry or something. But don't take it like from 9:30 to 10 o'clock. Everyone gets crushed in this market, everybody's stop loss gets hit, and everything happens during that time. And after 10 o'clock market take will its push phase, and it will be keep on pushing to the one direction. So let's see on a previous date, like on this one. See, what's this? As you guys can see over here, right, the price was falling, and it was making the retail traders trend line, if you guys can see, right? So price gave a breakout. So this is not a breakout, this is a liquidity sweep, okay? It take the liquidity, and now lots of them will be willing to buy right over here, okay? And lots of them would have bought over here, and they are targeting this high. But the thing is, it went up, came back down, and then what it did, it just shorts to the downside and takes the low of the London session. Why it takes the London session low? Because there was a sell side liquidity. and at what time. So like if you guys can see, there was a, like this is a 10 o'clock candle, okay, this one. So right over here, if you guys can watch closely, it was also a breaker pattern. First it took the high of this market structure, swing high, and then it took the, wait, hold on, then it took the low also right over here, okay. So when it took the low, then it, at the right moment, it bumps into this breaker, this one bumps into this breaker and then starts falling. And then for one more time it came back till this fair value gap. It gave one more swing to the downside. And let's see, so let's see for the afternoon session, okay. So this was a 14-minute candle. So if you guys can clearly see this, okay, what you are able to see right over here, double tops, right? So it's like a double top. There will be stop loss of retail traders. So price take the stop losses of retail traders, then it gave market structure shift at 215, right? And it left a big fair value gap right over here. So you could have entered in this fair value gap, or you could have entered from this, okay, from optimal trade entry right over here at 705 level, and you would have targeted this low. So don't take trades at like after 1330, because you will see this fair value gap, okay. Like you over here, there was also a market structure shift, if you guys can see this one. So what some of guys will do, that they will see this fair value gap and they will enter right over here, and this what will happen with them, the stop loss will be 100. So wait for till 14 in afternoon session and wait till 10 in morning session, and I should show you more. And this one also the trade which I took. See this was a double top right over here, and these were relative equal highs, okay. And there was a fair value gap also. For some of my students, they think like fair value gap is not working. You have to look for liquidity, that what's going on. First price goes and takes this high, okay, and then it gave a market structure shift to the downside, but it was a breaker pattern over here also, if you guys can see, and it was a fair value gap also as a one more confluence, but there was a fair value, this breaker also right over here. Why? Because it took the high and then price came and it took the low, it came back in, bumps into it, and then goes down. It was at correct at like 945, 950, 948, correct 953, right? At 953 this trade happened. But the thing is, if you would have waited for 10, right, like this is a 10 o'clock candle, this one. So see, at the 10 o'clock, after 10 o'clock also, there was another fair value gap right over here. If you would have entered in this fair value gap right over here and your stop loss would have been above this, then you would have got another big trade from here. And let's see for afternoon session. 14, this. After 14, if you can see, like there was not a big move, it was in a ranging phase, because it got all the move in the morning session. And I should show you the more example like this. Oh, this was a bank holiday on Monday, right? And this was a ranging day, okay. So, okay, so look it over here. What price did? 935, 942, correct at 10 o'clock, okay. Look at over here, it's a 10 o'clock. You would have got an entry right over here, because it was a breaker pattern. It took the high, took the low, and bumps one more time into this breaker, and then it goes for the sell side with this this low, London low. But look at closely, like after 10 it took this market structure high, came back into this fair value gap. It could have gone till here, so your stop loss placement will be below this, okay. Came back in, goes up and targets this relative equal highs, okay. And let's see for afternoon. Yeah, see, so look at the time below. What's the time? Time is like 2 o'clock, okay. It goes up and comes and bumps into this fair value gap right over here at correct 215, and then you can see the move. So this what happens if you will not get a move on 10 o'clock in morning session, you will get one trade in afternoon session. But the main thing which I want to tell you, that from 9:30 till 10 o'clock in a morning session in indices, it always kicks out everybody. Okay, it kicks out every retail trader, everyone. It just keeps on taking the stop losses at that time. So don't enter till 10. After 10, wait for the setups which I taught you, all of those setups, just wait for them and then take the trade. And if you want to trade the afternoon session, wait till 2 o'clock or like 14, okay, and then take the trade at after 14. So you can see, like, every time, like, this is your homework, right? Just go into your charts and go back in the time and look for these setups. Okay, right over here also, see, correct, 10 o'clock, it gave a market structure shift right over here. There was a fair value gap, and this was a 10 o'clock candle right over here. See, after 10 o'clock what happens. Okay, and now let's see for 14. Okay, so this was a 14-minute candle, this one. Okay, this one was a 14-minute candle. So after that, price came back, it didn't took this low. Okay, if you can see, this didn't take this low, and then it go back one more time. Then you can see over here, like, there was a no movement, but it took this high, right? And then it didn't give any setup. But the thing is, it worked from our liquidity perspective. So this is what you have to do. You have to go back into time and you have to look at correct this 10 o'clock and this 14 o'clock, that the setups which I have taught you is forming or not, and you will get that 90% of the time the setups are over there. So this was, I want to tell you, that you can easily get like 1:3 every day if you just focus on this timing. Right timing, right strategy, and right entry will make you profit. So I hope you guys like this video. So if you guys like this video, drop a like, share it with your friends, and subscribe if you're new here, and turn on the post notifications, so whenever I post a video you will get the notification. And so until next time, wish you good luck and good trading.